Hi, my name is Hannah, and today we're interviewing Joshua Rotbart. Joshua is a recognized expert in precious metal with clients across the world. Today he gives us his view on business and economic trends as the curve flattens and we emerge into post-pandemic world.
This podcast channel is about you, successful international entrepreneurs, successful expats, successful investors. Sponsored by hcj.tax.
All right. Good morning, Joshua. Thank you very much for your time. It's good to see you again. Please introduce yourself.
Good morning, Derren. Yeah, I'm Joshua Rotbart. I'm the managing partner of J. Rotbart and Company, and we are an international bullion house. And what we offer mostly private investors, high net worth individuals, family offices, private banks. We offer them a secure way to buy physical precious metals, and mostly gold. And we help them through the process of sourcing the metals, transporting them, storing them, arranging custody. And the reason people do it is just as a wealth protection strategy, as it's their safe money, if you'd like. And they like the fact it's a physical asset. It's not digits on a server or a paper product or paper asset. So they want the tangibility of the asset. I've been doing it for over 10 years. I've been working first for one of the biggest vault operators in Asia. So I'm very familiar with, I would say, with the logistical aspect of it, because when you go into physical gold, you have to know the logistics behind it, the transportation, the vaulting, the insurance. So that's kind of where I come from to this industry. I've been based out of Hong Kong. We have offices in Singapore, Manila, and we've been very, very global. So our clients come from 50 different jurisdictions, and we store for clients in Hong Kong, in Singapore, in Zurich, in the US, Liechtenstein. So really offer, out of our office in Hong Kong, we really offer the whole sort of services and really for global investors.
Okay, that's wonderful. So 10 years, how did you get into this line of business?
It was just coincidence. I moved to Hong Kong. I followed my wife, moved to Hong Kong.
Okay.
I looked for a job, and I found a job with a logistic company I never heard of before, secure logistic company. It's a very niche business.
Yeah.
Before that, I was a corporate lawyer. So they asked me, we have this new vault in Singapore, this new line of services we're offering to private individuals. Can you take over, look at the legalities, the liabilities, the logistics behind it, which I did. And then I said, listen, why won't you run this division? So it's really pretty random. And about 5 years ago, me and my team, we left the mothership, left the logistic company to open J. Rotbart and Company. And the idea was not to focus on the logistics only, but to offer trading, to offer services for clients who don't want to store, maybe just want to take delivery and take it home. To allow services like lending, we offer lending using gold as collateral. So all these different type of services we couldn't do when we were part of a bigger group. In a way, we work with a lot of asset managers and private bankers. In a way, it's like the moves bankers are doing when they leave a private bank and turn into independent asset managers.
Exactly.
So we left about 5 years ago, and J. Rotbart has been in business since then.
Fantastic. So, obviously at this point, more so than usual, precious metals has been a point of discussion, I think, when things started to go south on the various markets. I guess people like me who have private clients, we get these emails, we get these calls and WhatsApp messages at all times of the day and night, people panicking about what's been happening on the major exchanges. And, obviously precious metals, when we look at the long-term curve, or even short-term, but definitely within the last few years, it has been trending in a very decisive direction upwards. But, for me, I have questions. So, like, in a situation where there's a lockdown and I can't fly into Hong Kong, I'm not allowed to fly into Singapore, how does one access the precious metals that they have with someone like yourself?
Okay, so it's a good question, but before let me separate between, I would say, two kind of prototype of clients, so two different clients. One type of clients are the clients who are afraid of a doomsday scenario, of looking at gold or silver items. That's something that really they need to possess at home, because they may need to buy bread, they may need to gain passage to another country, they may use it to escape, or they may use it as a means of exchange in kind of a scenario when really everything is, there's a total meltdown of the society, right?
Right.
And these guys usually they'll ask us to deliver to their house. They all sit on a bunch of gold coins or small gold items, silver coins, and these type of lower denomination and lower values items that I can easily move them around, and they will keep it at home. So we will just basically procure it for them and ship it directly to their house or their office. The second type is what I would say the more professional investors. The one that says, I don't need it to buy bread. I want it because I need it as a diversification from our portfolio. And for these type of clients, they like the fact that it's physical, because of course they have no counterparty risk, but they don't feel, I would say, they don't feel the necessity of holding it physically themselves. So all our communication is done via Zoom, via emails. Nobody meets anyone these days, right? So they will instruct us, and they will ask, example, a client for Germany, buy me silver coin, put them in Hong Kong and Singapore, keep them under custody, and when they appreciate in value, I will sell them. So there's two separate types. So again, on the type of the investors, they don't need it at their house, and we can communicate, and still we can source the goods and sell them and trade and do whatever they need to do with it. The other type of clients will keep it at home. And interestingly, we have clients that kind of have two approaches. We have clients that keep, $2 million in gold in our professional vault in Hong Kong. But they asked, okay, ship me $100,000 of gold coins and ship it to my house in the UK, because this I'm going to keep it with me. So it's interesting to see the mindset. And sometimes these two type of clients, they merge to be manifested in one.
Okay, that's interesting to know. So in a situation where there's a lockdown, is it possible logistically to still get the coins to that client in the UK, Singapore, wherever?
From what we see, first of all, this is a very unique situation. I think it's the first one for all of us, basically. So we can only see what we're seeing in other places. So I can tell you, for instance, I look at Singapore. Singapore has shut down all workplaces through the beginning of May, right? However, logistics companies are exempted because they're essential services.
I see.
Receiving gold, shipping gold, being able to trade actively, that's not a problem. Of course, if you come to Singapore and you say, I want to go to the vault myself, this would not be possible. But if you just want to liquidate your holding or buy more, that's no problem. And we've been doing it even now when Singapore is shut down. So on a lockdown, even in a lockdown, what we see in Switzerland, we see here, we see in the UK, the logistics business, the secure logistics are essential business. By the way, one of the reasons, because the same companies that manage the vaults, that operate the vaults, are the companies putting cash in the ATMs. As long as those armored trucks you see, the Brinks trucks, the Loomis trucks you see driving around, as long as those trucks are delivering a banknote to the ATMs or to the supermarkets, you will still be able to move gold around. So we're pretty surprised how well everything is still. And even now, we're still fully operational in Singapore, although the lockdown, we're fully operational in Switzerland. The only issue we're seeing now is to get the goods, because the refineries are shut down. So for instance, in Singapore, what we saw the refineries are shutting down, and in Switzerland, the refineries are shutting down, and they make new material. So that's one thing that we're seeing.
I see. Okay, that's good to know. And well, obviously, as a U.S. person, I'm not allowed to have contact with people in certain jurisdictions, but I know other people in the private client space that are not so constrained. So they have clients in, let's say, Iran or Venezuela. So in a scenario where someone in a place where a jurisdiction that's not just facing a lockdown, but also, trade embargoes and stuff like that. Are companies like yours still able to get product to them as needs be?
No, that's something that we're very
Yeah,
strict on.
sure.
Sanctioned jurisdictions
Mm-hmm.
or sanctioned people. And a lot of the time, the problem will be a logistical problem. For to give the example of Venezuela, I got approached by a
Mm-hmm.
Venezuelan family, which are not sanctioned. They're good guys.
Right.
Business family, been doing business in Venezuela for a long time. They have gold there, but there's no way of them getting the gold out except for trying to get on an airplane carrying it. So in terms of logistic companies,
Mm-hmm.
they cannot do it. So we separate between the type of clients we can bring on board, which
Mm-hmm.
has to be clean clients with clean records and so on,
Mm-hmm.
and the logistics side of things. I mean, if they can be good clients, but we just cannot help them take the goods from their country of origin. In this case, they'll need to deliver it out, carry it themselves legally. They need to show they paid customs duties, whatever necessary, so we can handle it. And that's, by the way, one of the reasons that we really encourage people to do it professionally. And we see it, but many professionals work with a company like us or other similar companies, and that means doing it professionally, meaning you don't keep it offshore where there's a liquid market, where there's access. Even now we see in Hong Kong and Singapore, there's still access. It's still very liquid. We can buy, we can sell. There's no restrictions. If you need the money, you can still get the money. We can wire it to you, or you can wire money to us. But in terms of the physical possession, do it in a jurisdiction that's already open and not something that's under constraints or logistical disruptions. And that's something very important that a lot of people don't understand. And maybe because I come from the logistics industry, understand the fact that, you're not buying a promissory note from an unknown issuer on your online banking. There's actually, the gold needs to come from somewhere and move to somewhere. And we see it, for instance, in the Philippines. We have clients, we have a lot of Philippine clients. Most of them store offshore in Hong Kong and Singapore. But we had the clients that thought it would be a good idea to carry their bullion to the Philippines, which maybe they did. And then they contact us and say, okay, now I really made good money on this gold. Can I sell it? Like, you cannot export gold out of the Philippines, not legally at least. So we, anyway, cannot help you. So if you like, what I actually want to say is keeping a few coins for kind of sense of security is fine. But when it comes to higher values, it's really better to do it professionally and store it where the international bullion centers rather than keeping it in, as you say, Iran or Venezuela or places like this.
And what about logistics the other way? So, for example, say I'm a legitimate family in Caracas, Venezuela, and I have some gold in a vault in Hong Kong or Singapore, and I need it for transactions in Venezuela. Can I get it in?
That depends on the country tax regime.
Right.
So, and if you're looking at the Philippines, you have if you're looking at the Philippines, you have over 20% tax. If you're looking at Israel, there's 18% tax VAT. If you're looking at I don't know specifically Venezuela, but if you look at China, you cannot import gold to China at all unless you're one of the big banks.
I see. Okay. So assuming you can meet, you have the relevant license and you willing and ready to pay your taxes, it's possible, right? Yeah. But I'm thinking, okay, so from a logistics, and perhaps this is a simple question, but when it's coming into, let's say, a less than stable environment, is it door-to-door service? So the logistics company takes responsibility for everything that happens between when it exits Hong Kong, the vault in Hong Kong, and when it comes to me in, let's say, in Jakarta, Indonesia, to my door?
It really depends on jurisdiction. Okay. Some jurisdiction, yes. It's full coverage until you basically sign off, like any FedEx or UPS shipment, kind of similar arrangement. But some of them, it's not. For example, we looked at, we had a request to send some gold to Mexico, to the Cancun area. And the logistic company said, listen, we'll take liability until it gets to the airport. Once you clear the customs, then you take it out. That's your problem. We cannot guarantee anything about these goods. Why? Just because of security issues.
Yeah, naturally.
Again, on the less stable jurisdictions, usually the practice, let's put it, the practice on those less stable jurisdictions would be for clients to buy gold maybe over the counter from, I don't know, from a less diligent dealer or something, or someone like this, and just carry it back to their country. Maybe pay someone under the table to get it in, to look the other way. This is usually how it's done in less stable jurisdictions.
I see. And okay, so again, I'm couching everything in terms of what's happening right now. So if one has investments in another asset class, so let's say stocks or whatever, or in rental property, you have rental yield, you have dividends if the company is profitable. So, you get a return periodically to meet your expenses. Say I have investments in precious metals and it's in a vault. Is there any structure or any mechanism by which I can get some minimum return out of it, aside from just liquidating it and selling it?
That was the precious metals as an asset don't give any yield.
Yeah.
You could look at gold, for example, as another form of currency that you keep in your wallet, cash money, which appreciates only compared to other assets. So that's kind of the basic. I think the strength of gold comes first the fact it appreciates quite well on the long term, so it still appreciates well. Second, it gives the purchase power. So if you look, and we just wrote an article about it. If you look, an ounce of gold could have bought you in the 60s, I don't know, about 50 cups of coffee. Now you can buy 500 cups of coffee with an ounce of gold. And if you keep, versus if you had the dollar, you only need to add more and more dollars to buy a cup of coffee. You're getting more for the same. So it keeps the purchase power. But also, and that's very important, it exactly in times of this that you see how gold is powerful. And it couldn't be a better analysis because it doesn't provide the yield. But if you look year to date, let's say the S&P fell down anything between, or the Nasdaq, the big equities fund fell anything between 20 to 30%, and gold year to date depreciated in 8%. Right, so this is where gold is important, and it's to cushion the downfall, if you want, or to cushion down the fall in your other assets. And it's interesting you mentioned real estate. Again, I have real estate now in different jurisdiction, and I see now again I see the downside because now I have all rentals, all our tenants asking for either leaving the apartments, downgrading, asking for breaking the rent. Yeah. So actually, again, we used to think the first as a very profitable asset that gives you yield, and it does, but not when there's a crisis. Exactly. There's a crisis, you end up paying the taxes, and not that getting any cash flow. So in normal times, gold will not give you any yield, but it in time, and the idea is for times of crisis like this, it's a safe money, it's a safe haven where it performs the best. Now, having said that, I know there are companies that offer some type of yield on gold. One of them is based out of the US, and they pay an interest on a gold leasing program. I know a company in Singapore that offers to kind of manage your precious metals portfolio as an investment portfolio. You need to give them some discretion to buying and selling your metal. So it is possible to squeeze some yield out of it. But I think most clients don't like this model so much. So then for them, the whole idea is to take whatever this allocation to gold, to set it aside as a long-term safe money. Once you start playing with it and buying and selling it, you can give a discretionary kind of power of attorney to any asset manager and tell them, please play with my money, generate me yield. So you can do this with precious metals, but not necessarily that's the idea. But yeah, there are ways of doing it. But for me, the fact that again, it keeps the purchase power and it still appreciates. And we're looking at almost 10% average appreciation since 1971, since the President Nixon terminated the peg between the US dollar and the gold. You see 10% increase average. I think it's pretty good for something. Again, it is something that has zero risk. Okay. Unlike property, you have the tenants, you have the physical situation of the property or unlike stocks. Again, it's really, and I think what's happening, it's interesting because last time I saw such a demand for gold was 2012, 2013.
What happened in 2012?
The debt crisis in Europe.
Oh, yeah.
In 2013, the government in Cyprus confiscated a lot of people who had cash deposit, had to get a haircut deposit.
Yes.
So that was the last time I saw such a big increase in the price of gold, or such a big demand. The price of gold, and we have it now. So between we had kind of we went sideways in terms of the price. And what seems now, and have enough time in this industry to see it comes and goes. When the times are good and the equities market are doing wonderfully, people say, "Oh, gold, it's such an old asset. It doesn't give me any yield." And suddenly, and I talked to a client the other day, and he bought, I don't know, some $500,000 worth of gold in the vault, and he wants to buy more. So listen, let me sort out my other investment. I just realized I was too exposed on all the volatile stuff, and I pivot to safer, risk-free. You need to remember, gold is a risk-free. Physical gold is a risk-free asset. So if you compare what you're getting for the risk, it's doing fine.
And to clarify my understanding, so in the instruments that you described previously, where it is possible to get power of attorney, there may be some sort of trading, there's some sort of yield, that is paper gold as opposed to physical gold?
The company specifically I'm speaking of, I think they do, I believe they do physical gold.
Oh, they do physical as well, right.
I believe they do, but the mechanism and how well they're trading thing, and also it's a licensed activity because you're actively managing a portfolio. And in our industry, actually, clients prefer to work in an unregulated entity. They run away from the bank. They want to leave the financial system. And I think once you start doing these activities that may be perceived as financial advisory,
of course,
or active portfolio management, I think this is where some clients will feel uncomfortable because that kind of exposes them to the regulatory world. They're not very keen. They've been leaving. They want to leave this regulatory work because they want direct access to the asset. They don't want to consolidate their gold holdings with the other financial assets.
Okay, understood. Okay, could you tell me a bit now? So now we've discussed what's going on now. But, this will come to an end at some point. They'll get a vaccine or whatever. What do you see happening post-pandemic?
In our world, in the bullion world?
Please.
I think prices-wise, we'll see a correction in the prices. So I think gold have been doing very well this year. Again, as of yesterday, 8% or 8.5% year to date. We'll see a correction because even gold during this period was very volatile, more volatile than the last few years. So we'll see a correction in the prices. I think we'll see people are maybe happy to move to riskier assets. So kind of more less interest in gold for the short term. At least what I can get. On the other hand, I'll be happy to go back to business as usual from supply point of view. Because again, today we work long hours because not only we have more trades and more clients buying metals, it takes longer to fulfill each transaction because we really, and luckily we're really a global company. But we need to source from and ship and move and ship gold around. Even now, American clients, I'm shipping them gold from Hong Kong. Because the refiners in the US are still Royal Canadian Mint, the US Mint are still shut down or resuming operations slowly. So suddenly I need to ship from Hong Kong and ship it to the US, So I'll be happy to get back to business as usual when you have kind of steady supply of gold products, silver products. We're taking silver orders now because silver is there's a big deficit in supply. We're taking orders now for silver products to be fulfilled in 2-3 months.
Okay.
So clients can pay today $500,000 For silver bars, you will get in 3 months, which is, in my opinion, it's quite crazy. So I'm hoping once this is done, again, we will have a correction in the price, but we'll resume the logistics side and supply side will be back to usual. One interesting thing, and probably you've seen it as well, people have very short memory.
Yes. Yeah.
So I assume, a few months into the post-pandemic period, like gold, look at the S&P, look at the thing in Hong Kong, look at all the equities market, they're doing wonderful. People will be. It is what it is. It's who we are. It's how our society works, right? So I expect to be kind of a little bit more quiet. But what I do hope, and a lot of the things what we do is a lot of education these days to tell clients, don't forget what's happening now. You lost 20% on the main part of your portfolio, which is equities. You lost 20-30%. And the component of the gold, look at the appreciation. Don't forget it when you're considering that you put your money, or at least, and the gold at the end of the day is not for most investors, is not the main investment. The 5 to 15% allocation that they use for in this period. So I hope people will still, with the short memory, they'll still remember to allocate those 5 to 15% in metals.
Okay. And is there any, because again, as we all saying, this is unprecedented with the lockdowns and the supply chain issues. Are there any adjustments to your line of work that you see being made just because of the uniqueness of what we're experiencing now?
I would say the change, of course, that the premiums are higher in terms of, because a physical gold is you have the spot price, which you can see in Bloomberg, all the big financial outlets, but then there's the premium on top, and we see big deviation now between the price of paper. But when you want to buy, I can tell you, we sold gold coins last week to a client. We had to charge 8% over the spot price. So if you look at it now, you say, there's starting to be a deviation between the paper market and the physical market because of those premiums. So of course, things are more expensive. Trades are taking longer. There's a lot more of online activity. Of course, we can, we know each other from all the conferences we participate in Asia. And so of course, these are all gone. So we rely more on online. We rely more of really, we had to move staff around. So we had to take one of our staff members out of the Philippines and bring them to Hong Kong. People are working from home, of course, me included. Most of the team, we work in separate environments. So again, from a logistical point of view, from a pricing point of view, and fortunately, we're busy more than we've been in again since 2012, 2013. There was the editor of the Financial Times. I heard him speak a few months back in a big bullion conference, and he said the two types of people that flourish in bad news. He said these are journalists and gold dealers.
Okay.
It's unfortunate, but it's true.
Yeah. Okay. And finally, my final question would be, beyond gold, with just the general global economy, I know we're all just taking a stab in the dark, but what do you see happening as we emerge from this globally?
Bounce back faster than others. Of course, we see already the tremendous boost to the online companies, and I think this will not change. This will only be enhanced more and more. I think it's hard to go back if you don't go to the supermarket and you arrange for delivery, and you get used to it for a month or a couple of months, or speaking on Zoom instead of doing meetings. It will be hard to go back to exactly as we were before. So some industry will flourish. I think tourism, for example, will take them time because people will even once and I think we're starting to see the end, the light in the end of the tunnel. But I think people will not be so keen on taking chances and go back to our hectic behavior as we do. I think we will see appreciation in the stock market. One of the reasons, because at the end of the day, we're going to see there are more stimulus packages going from the EU, from the US, from China, even here in Hong Kong, Singapore. we're talking about billions and billions of dollars that are being literally printed and handed out to businesses and individuals. So this will make an effect. Another thing is, I think, a widening gap between the rich and the poor. I think the poor, the one that were paying the low-paid jobs, that didn't have stable employment. I think a lot of the countries, so the Philippines, Indonesia, Malaysia, the countries that were kind of on a breakthrough of advancing their economies, I think they will suffer a bit, and it will be painful for the poor in those, or even in the U.S. For those people to get out of. If you're an American and you're sick and you're out of job, it will take a while to get back to the middle class. So I think I'll see this, and the rich can always take care of themselves. So I think we'll see this gap bit widening. But overall, I think it will take a year, maybe a year and a half. It will be back to usual. And I know already people are taking advantage of opportunities. There are opportunities even now. I know people who opened factories for masks, for example.
Of course, yeah.
Well, moving raw material around, being able to ship raw material these days is an opportunity. Even I heard of a friend with the F&B industry just bought over 2 restaurants, went bankrupt. So there are opportunities, and I think again this is why people prefer to stay liquid now.
Yes.
And once we're out, we'll start seeing the flow of money diverting back to the equities market, to different projects, maybe even to real estate that will be underpriced. One thing is, in a word of caution, is that all these stimulus packs will have a meaning in terms of the inflated debt, not only in the US, but the US, Europe.
Yes, that's right.
So I think we're going to see kind of very vibrant financial markets and real estate markets, but there'll always be kind of, for the more risk-averse people like me, we always we keep one eye on the debt and the inflated debt, and we're asking ourselves, how will the government be able to pay this? I mean, the US is a huge debt as we speak, as it is, right? And now we've already $2 trillion stimulus pack, and they're talking about a second batch of trillions of dollars. And again, this for our business will be good, because again, one of the reasons people come back to gold is because it has a real value, intrinsic value, rather than the paper money that government print. I mean, at the end of the day, if you remember, that's why Nixon canceled the gold standard, because the US government had to pay for the war in Vietnam.
Wow, yes, that's a good point. Yeah, absolutely.
Right? I had to start printing money, but there was no gold to cover. There was no underlying asset. There was no gold as an underlying asset. That's why they separated the prices. So again, we'll see some opportunities, but I think some painful adjustments, mostly to lower income people from countries that the gap has already been wide. I think it will be good for the equities market in the midterm, but I don't think it will be good for the economy, because the debt burden will be an issue in the long term.
Okay. On that note, thank you very much, Joshua. I appreciate your time and your keen insight into what's happening, not just in your industry, but globally as well.
Okay. Thank you then. Take care. Be safe.
Thank you.